Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Friday, the EURUSD pair made another rebound from the resistance level of 1.17951802, the fourth in a row. Thus, during the holiday period, the bullets did not have enough strength to break through the zone. A reversal in favor of the US currency took place, and a decline toward the Fibonacci level of 38% at 1.1718 began. A consolidation of prices above the 1795-1802 level would favor the European currency and increase the likelihood of continued growth toward the next corrective level of 0% at 1.1919. The wave picture on the hourly chart remains simple and clear. The most recently completed upward wave broke the previous peak, while the most recent downward wave did not break the previous low. Thus, the trend officially remains bullish. It would be hard to call it strong, but in recent weeks, the bulls regained confidence, and then the holidays began. Easing of the Fed's monetary policy will put pressure on the dollar in 2026, and the ECB will not create any problems for the euro. On the 4-hour chart, the pair has reversed in favor of the European currency and resumed growth toward the corrective level of 0% at 1.1829. A rebound from this level would favor the US dollar and lead to some decline toward the support level of 1.1649-1680. A consolidation above 1829 would increase the likelihood of further growth. No emergent divergences are observed on any indicators today. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could plan to buy the pound today upon reaching an entry point around 1.3500, targeting a move to 35.30. Near 35.30, you could intend to exit long positions and sell back, expecting a movement at 30-35 pips in the opposite direction. It is unlikely to expect a strong rise in the pound today. Before buying, make sure that the MACD indicator is above the zero mark and just beginning to rise from it. You could also plan to buy the pound today after two consecutive price tests at 1.3483, when the MACD indicator is in an oversold area. This will limit the pair's downside potential and lead to an upward market reversal. You could expect a rise to the opposite levels of 1.3500 and 35.30. You could plan to sell the pound today after the level of 1.3483, which will lead to a rapid decline in the pair. The key target for sellers will be 1.3456 level, where you could intend to exit short positions and immediately buy back, expecting a 20-25 pip move in the opposite direction. Pound sellers may manifest themselves during the correction. Before selling, make sure that the MACD indicator is below the zero mark and just beginning to decline from it. You could also plan to sell the pound today if there are two consecutive price tests of 1.3500, when the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a market reversal downward. You could expect a decline to the opposite levels of 1.3483 and 34.56. That's all for today. See you online soon.